This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. And just in case if you're wondering and rubbing your eyes thinking whether it's Monday, well, it is not. The weekend is still there. It's a Saturday morning, but we're trading the full session. Normal markets today. Guys, hi, morning.
Hi, good morning, Prashant. Morning,
You're
Nigel.
the painted Sonia as well.
I don't know what to say anymore. I mean, we're trading on a Saturday. I don't know who's watching us. There's suddenly a holiday on Monday. Things are all over the place. I mean, I'm sure I echo the pain of so many people out there. But, you know, it is bizarre what has happened in the last 24 hours. Of course, the markets need to make up for that holiday that we suddenly have on Monday. Be that as it may, full trading day today. I don't know who's happy about that.
You would have wanted a little bit more planning that goes in the system. But guys, we've got a trading session, so let's get straight to the action.
Oh, absolutely. And there will be action, but maybe a little bit less.
Much
Yes,
less.
much
It'll be
less.
much lower because FIs are going to be non-existent.
Domestic mutual funds are not
funds
there,
also
yeah.
I
as
think a lot
well.
of people also will hang back and take it easy.
Yeah, you
because
have
it's,
to.
you know, it's a Saturday.
And suddenly you have a long weekend, right? A lot of people will
Mondays,
have
yeah,
Mondays.
absolutely. So let's just quickly run you through what you need to know as we begin another session, because it is a normal session. I'll start with where we left off yesterday, right? I mean, the Nifty, and we made this point yesterday, same time, Friday morning, that we are likely to see a bounce. Most likely, you know, this midweek sell-off that we had, that 500-point sell-off that we had, or rather, it was a 600-point two-day sell-off, that for now maybe starts to halt, and we get a decent, meaningful pullback. We got that. But, you know, the only kind of complaint is that both the Nifty and especially the Nifty Bank, after opening, they did not build on those gains. There were no incremental gains to be had. The Nifty Bank actually sold off and it ended slightly in the red. So there was nothing on the Nifty Bank left by the time we closed at 3:30 yesterday. Now, the question, I think, still, which many are asking is that two-day kind of fall completely behind? Can we rule that out, or will it come back in some fashion later? Well, if you want to sort of pick on the answer from global markets, it's a positive one. It's certainly positive. The S&P 500 has made a new record high, closing high, for the first time in 2 years. That's got to count for something, the S&P 500. The index went up about 1.2%. The Nasdaq was up about 1.7% as well. So equity markets overnight giving a positive thumbs up. We had some data which I think propelled markets higher. This is the Michigan Consumer Sentiment. It's a survey, basically, if we can move the graphics along, which beat expectations, beat estimates. Inflation forecasts fell, and it was a surprise, right? But this is exactly what markets were looking for, which is that consumer sentiment remains upbeat and consumers' expectations of where inflation will be now and 6 months from now. That's what the survey asks consumers to sort of say. That falls. So it's like I don't want to use the oft-repeated word Goldilocks, but this is what markets wanted. And if you look at it, yields cooled off after the data came through and markets actually pulled higher. This was the trigger. You still had Fed officials, and we'll put out details of this a little later, who came back. Two Fed officials who came back and said that we don't want to declare victory in inflation before we actually get to the 2% mark. And another one who, again, sort of emphasized the fact that we've got to be careful, we've got to be calibrated. It's kind of pushing back on that early rate cut narrative, or rather hopes. So you also had the March Fed rate cut odds, market pricing of which fell to 42.5%. The quantum in any case has fallen from 25 to 15 basis points, but the odds also fell to 42.5%. Now, just to circle back and answer that question, right, whether this is it and the market now stretches higher. So just a couple of levels. Yesterday's high was 21,670. The first resistance, which I was hoping that we'll get to it yesterday itself, we did not. We fell about 30 points short, is this 50% retracement of the two-day fall, the 600-point two-day fall, which stands at 21,705. So that's level number one. If we take that out, the next resistance is exactly 100 points out, 21,800, 21,804 to be precise, which is the 61.8% retracement of the two-day fall that we had. So to my mind, I mean, if you are able to take these two levels out, 21,700, 21,800, and stay above it, then we can start to think about the market extending these sort of gains on the upside and maybe look at the previous highs, etc. But that's the first hurdle, the two hurdles to take out. On the downside, I mean, I think, we'll be well served if this recent low which we saw, which is 21,285, does not come into the picture anytime soon, or we don't see it. It should be protected. That's the point. Nifty Bank, similar picture. It's much weaker. I mean, the problem for the Nifty is that it's got no help from banks at all. Yesterday's high was 46,430. The first retracement is the 38% there, which is 46,529. We never got there. I mean, actually, as I said, the Nifty Bank ended lower. Bank Nifty, the next resistance is the 50% retrace, 61.8% retracement, which is 46,868. And on the downside, the Nifty Bank should protect the low that we saw, which is 45,430. That's Thursday's low coming into play. No point looking at the GIF Nifty, etc., because, I mean, there's not very much activity. Global markets are not trading, so no indication from that. But given the US handoff, etc., that we have and the momentum that we saw yesterday, I mean, it should be a positive kind of a start, although action through the course of the day expected to be extremely muted. Sonia.
Oh, absolutely. And for today, at least, we have a positive handover from the US markets, which is looking very good. And the domestic cues are also not too bad. So let's get straight to that, right? The S&P 500 is now officially in a bull market after the kind of run-up that we've seen this year. And, of course, the big up move that we had in 2023 as well. All-time highs, fresh all-time highs for the S&P 500. We also had very strong bounce back from a lot of the technology stocks in the US market. So there was a comeback there. For our own markets, we had stable set of numbers coming from Reliance yesterday, in case you missed it. The Reliance retail numbers were stellar as can be. Jio was also quite a stable set. The oil to chemical business had a bit of an impact, but that's also because of the planned shutdown, maintenance shutdown that the company undertook. So good numbers over there. HUL could really sour sentiment in the consumption space today, in the FMCG space. The numbers were below estimates. The company says they see demand challenges, and the FMCG sector could perhaps take a step back because of that. There was big buying from DIIs yesterday, up almost 2,600 crores, while FIs continue to sell, and that has been a bit of a pain pocket for the market, down almost about 3,700 crores. Couple of more numbers that I'm watching, and we'll get to more details, but Paytm would be interesting. It has seen a decent amount of run-up, and the numbers are good. They've been improving. The losses have gone down. The EBITDA has improved in Q3. So that's another stock that I'm going to look at. Remember, since today is a non-business day, domestic mutual funds will not participate. All the redemptions will happen on Tuesday. So in that context, volumes will be on the lower side. FIs are also not going to participate. I mean, it may not be too much of a directional move. But yes, plenty of stocks in focus. You have ICICI Kotak that report today as well.
Well, as I heard you and Prashant, obviously it was valid market information, but I was still coming to terms that it's a Saturday morning. We're live on television. The markets are going to start. Wow, right, guys? I mean...
So, when I was driving to work today, generally you see people like scurrying, school buses and all of that. Today there were people taking their morning walks and cycling on the road, and I'm driving full speed, getting here.
But it was at least clear, right? And it was a beautiful morning. It's nice and cool here in Mumbai. I put my muffler on. I said, let's put up the style quotient. Yeah, I mean, let's enjoy it, right? A nice ride to work, 12 kilometers.
Might as well enjoy it while you're at it.
Let's get back to the market action then, because that's what we are here for. So yesterday you had the Nifty. Well, it put on close to 150 points. You'll be happy about that. But the intraday chart of the Nifty Bank, you just put up a split screen on the screen. It'll tell you the picture. Yeah, that's the picture. And let's pull up another chart as well. For the past week, you'll just see that the Nifty ended down only around 1%. Not too bad, yeah? Because HDFC Bank, the star of the market, or the heaviest weight in there, that's taken 11% cut. Just take a look at it. So actually, the X of HDFC Bank, the markets have done very, very well. But that's a bit of a problem pocket. So you're hoping at around this 52-week low of around 1,460 odd, you see some kind of support coming on HDFC Bank. And I think, the downside could be fairly limited from these price levels, from this 52-week low. Let's see how that goes. FIs, what do? They added shorts yet again. And now the shorts in the system have gone up to close to around 53% approximately. And in terms of the net long positions, you pull up a chart. We started this series with close to around 80,000 contracts were on the long side. And the bar graph will tell you the picture. Now we're net short, close to around 16,000 short contracts in the system. Remember, in the past, we've gone, much higher on the short side. But I like some shorts in the system. Given the kind of selling we've seen from the FIs, at some point of time, those shorts will have to cover up. So maybe we see a few days of short addition. Not today, obviously, because they'll not be existent. What do the options data look like? Well, 21,600, 21,500 put. Both of them did see a fair bit of open interest breakup. So that's why, you just try to pull up the levels then. You have the 20 DMA. We could breach that in today's trading session in all probability. You want it to decisively be conquered. The 50 DMA, well, that's far deeper. And I spoke to a lot of technical guys, not just yesterday, but over the last few days. And no one's talking about life below the 20,800, 20,900 approximately. The near-term support, though, going by the options data, is 21,400, 21,450 because the kind of put writing that we did see. The Nifty Bank, that's pat in the level between the 50 as well as the 100 DMA. So both those two are your goalposts for you. Hopefully, the banking numbers that come out today are not too bad or maybe have a bit of a positive surprise, because otherwise this Nifty Bank, from being nearly 49,000 odd, if you just pull up a chart, you'll see that it's come down to close to around this 45,500 odd levels. But that's a crucial level on the downside. We managed to defend it intraday in the last week itself. So let's hopefully, defend that and try to move up. But guys, Saturday morning.
Okay, markets open today as per normal hours in case you've joined in late, and Jan 22nd is going to be a holiday for the markets. So today we trade the entire day. We have lots of stock-specific action to track for you today. We'll get to it in just a bit in our special top 10 segment. We're looking at Reliance, Paytm, Tata Steel and CESC that are on our radar on the back of positive news flow. There's HUL, RBL Bank, Fortis, Suntech Realty, Tejas Networks and Credit Access Grameen. That's on our radar on the back of negative news flow, largely because of earnings reactions that have come through. So plenty of stocks to talk about. But